Government shutdown. How it could crash the economy, markets, and your wallet. Washington is at a standstill. The U.S. government has officially entered its third week of shutdown, and there's still no end in sight. Federal workers aren't getting paid, government services are closing down, and markets are getting nervous. But the real question is, what does this mean for the U.S. economy, Wall Street, and for you, the everyday citizen? Today we break it all down. What's happening right now? On October 1st, 2025, the U.S. government officially shut down after lawmakers failed to agree on funding for the new fiscal year. At the heart of the battle? Disputes over healthcare subsidies tied to the Affordable Care Act and broader fights over federal spending priorities. Republicans insist the government must reopen before any negotiations on new spending. Democrats demand that subsidies for millions of Americans be restored first. The result? A stalemate. Here's what's closed or disrupted so far. 900,000 federal employees furloughed. 700,000 employees working without pay. The Department of Education has laid off around 20% of its staff. The Smithsonian Museums and National Zoo in Washington, D.C. are closed. The IRS warns of delays and lawsuits are piling up as unions challenge mass layoffs. President Trump has directed the Pentagon to keep paying the military using emergency funds. But for millions of civilians, the financial pain is very real. This shutdown could become the longest in U.S. history if it drags on. And right now, with neither side budging, that's looking increasingly likely. Impact on the economy! Shutdowns are more than just political theater. They have real economic consequences. The U.S. economy is already slowing under the weight of high interest rates, record national debt, and weak consumer confidence. A prolonged shutdown adds another layer of instability. Here's what happens economically. 1. Lost productivity. Every week the government stays closed, billions of dollars vanish from the economy. 2. Consumer confidence drops. When Americans see chaos in Washington, they tighten their wallets. 3. Government services. Slow, passport applications, business loans, and even food safety inspections get delayed. 4. Ratings agencies watch closely. Credit rating agencies like Moody's and Fitch have already warned America's AAA rating could be at risk. The White House estimates that if this shutdown continues for a full month, the U.S. economy could lose over $100 billion in GDP. Impact on the stock market and investors. Investors don't like uncertainty, and a government shutdown screams dysfunction. So far, the stock market has seen increased volatility. Here's what to watch. 1. Short-term volatility. Shutdowns typically lead to sell-offs in stocks as investors move into safe havens. 2. Longer shutdown equals sign deeper market jitters. If the stalemate continues for weeks, expect more market corrections. 3. Impact on bonds. Treasury bonds usually strengthen during shutdowns, but with $35 trillion in national debt, the safe haven status is under pressure. 4. Corporate earnings disruptions. Companies that rely on government contracts face delayed payments and suspended projects. History shows that markets typically recover once a shutdown ends. But this shutdown comes during a time of inflation, high interest rates, and global instability. What it means for regular people? For millions of everyday Americans, the shutdown is more than a headline. It's a paycheck problem. Federal workers, hundreds of thousands, are struggling with missed wages. Families applying for loans, FHA and SBA loans are delayed. Travelers, passport delays and visa processing slowdowns. Communities, local businesses near government hubs are seeing fewer customers. Students, cuts at the Department of Education could disrupt financial aid processing. And remember, the longer this shutdown lasts, the more widespread the pain becomes. Big picture, why this matters. This shutdown signals a deeper problem: America's inability to govern itself effectively. Shutdowns erode trust in government, hurt America's global image, and create unnecessary economic damage. At a time when the U.S. faces enormous challenges, from managing $35 trillion in debt to competing with China to fighting inflation, political gridlock weakens the country from the inside. Foreign investors are watching. Allies are watching. Rivals are watching. The U.S. government shutdown is more than just a political fight. It's an economic time bomb. For Wall Street, it means volatility. For the economy, it means billions lost. And for everyday Americans, it means real pain. The longer this drags on, the worse it gets. So keep your eyes on Washington, because the future of the shutdown will shape not just politics, but paychecks, portfolios, and America's place in the world. Stay informed, stay prepared, subscribe for more.
This is Felix!
See you next time.